The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Wednesday morning, 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading, and we just got all-time highs, folks, in the S&P. Right now, you're positive by 8 points, trading at 44.38. Zooming in on the action this morning, you see the spike, some CPI data, inflationary data, moderate data, market liking some moderated CPI data, inflation maybe not coming in as hot as the market feared. You get a spike across the board right now. We get the S&Ps up about 0.2%. You get the NASDAQ 100. There you see the acceleration as well. We spiked to above 15,100. You're trading 15,084 right now. We were below that 15,000 mark just at about 5 a.m. this morning. Dow catching a bid as well. Look at this Dow. And you back up the Dow, right? You're talking about all-time highs as well. The Dow, where that upper channel line is, that's kind of up to debate. It could be a bit higher, but we're talking about all-time highs in the Dow. In the S&P, did we get there in the NASDAQ 100? Not quite yet. You're about 80 points off in the NASDAQ, maybe even closer to 100 points off in the NASDAQ 100. And the Russell up about 7 points right now, 0.3%. Taking a look at the Russell, catching a bid as well. Bitcoin up to about 46,000, right where we've been basically for most of this week from Monday's action. Crude, got some action in crude right now. You make it to almost $69 overnight. You dive down to below 67. We're back at 67.38. You have President Biden calling on OPEC to increase the spigots. Not sure that's going to matter over there. But nonetheless, we have some volatility in crude. We're going to be talking to Teddy Kegstad from Forex-Trading-Unlocked at 40 past the hour. We break down the Forex market. We get his take on the action. We talk some commodities as well. Teddy's been calling for higher oil prices. We'll see what he has to say coming up later in the hour. Gold contract catching a bid off of the lows that we had Sunday night, 1677. We were skipping around possibly even as low as about 1720 yesterday. You see gold catching a bid on the CPI data as well. We spiked to a high on gold this morning of 1749. We've given up $8 though. We're back to 1741 right now, and we jumped to notes and bonds. There's a little bit of action. We finally get a bid. Look at this trend in the 10-year, folks. Last Wednesday, we're trading at 135.14. That was correlating to a yield of about 1.12%. Okay, fast forward to today, and we're sitting at 1.35%. That's even after catching a little bit of a bid. Remarkable action when you look at the yields in the 10-year, how we've seen those yields rise just over the last week or so, and we got some inflationary data that's going to possibly help that. You know, we do get a little bit of a spike. We'll get into the numbers in a moment. Let's jump over to the VIX Volatility Index this morning as the market just continues higher. We're looking at a price level of 1644 in that VIX. All right, let's jump to the headline. July consumer prices. You get a 5.4% number. The core number, which the 5.4% pretty much in line with expectations. The core number, core consumer price index, excluding energy and food, which are more volatile, especially what's happening recently with the food and the energy. Not sure how you eliminate food from an inflationary data point when food is something we all need. The amount of money that I spend on groceries, folks, my goodness, it's bananas. No pun intended. Core number, though, here's the key, 0.3% last month. 0.3% last month. The market was looking for about 0.4%. June's number was 0.9%, so quite a calm down from the number. Still, though, a rising number, right? On a monthly basis, 0.3% after we've had the dramatic accelerations that we've seen in recent months, accelerating higher. The real debate comes, you know, when you call something transitory, it doesn't necessarily mean, folks, that we're going to see a recoil exactly back to prices that we had seen a year and a half ago. That is just not happening. We're seeing rising commodity prices. We're seeing rising housing prices. We're seeing rising wages. It's happening. Those are going to contribute to an inflationary environment. But what could happen is we could get a waning of that inflation. Be interesting to see, you know, 2%, if you break it down per a month, okay, That's looking for maybe 0.1 to 0.2% every month is completely normal, because that would put us at around 2%. Well, we're at 0.3% last month, and we're still in the thick of things with inflationary data. Doesn't mean it's going to recoil, though, to erase some of those record-breaking numbers that we saw prior coming into this. So getting into some of the numbers here, a little bit more detail. Consumer prices rose 5.4% in July from a year earlier. Quite a price tag, right? When you're talking about 5.4%. Year over year, we're going to have to get back to somewhere around 2%. But we knew this number was coming, so that's in line with expectations. CPI, talking about the main number, not the core number, 0.5% month over month. When you exclude energy and food, CPI rose 0.3% last month. Market was looking for 0.4%. And the core figure is 4.3% over last year, a slight deceleration from June's 4.5%. That's a key number there to keep your eye on, a deceleration from 4.5 to 4.3 when you look at the headline, the core number year over year. Economists often consider core CPI a more reliable indicator since it's insulated from the frequent swings of petroleum and food prices. Yes, that is probably accurate, but if you insulate it from food prices, which are quite a price tag and quite a portion of what people spend money on, folks, not sure that's reflective of the inflationary forces on all of us out there. Nonetheless, that's the number out there. And we get that number at 8:30, and the market takes off, and we'll see how we open. But we got the S&Ps, folks. We're even catching another bid. We're up to 44.41. I don't think I've ever been able to say that before in the S&P, because that's a record print. 44.41 in the S&Ps. We're trading at this morning. The Dow continuing higher at 35,261 so far this morning. All right, let's jump around, take a quick peek at some of the FANG stocks, see how we're trading this morning. You got Amazon shares up about $10 this morning. NASDAQ 100's up about 50 points, so you're going to see a bid in most of the tech stocks. Microsoft up about $1 at $287. Yeah, Amazon barely in the red. Microsoft, Google shares trading higher by about $5. Some pretty waned action. We'll see where we open from there. The Dow, yeah, continuing the run. S&Ps as well. All right, let's jump around to some of the other headlines I've got here this morning. Jumping to travel. So Southwest, they're talking about that the Delta variant is hurting bookings, lowers outlook. So Southwest, all domestic, basically, is what they're dealing with in terms of domestic air travel. Now, they've been one of the strongest stocks out here when you look at the travel industry in particular. Even yesterday, accelerating from about 49.50 to 51.50. You take a look at this thing on a daily, right? You make it up to 64 bucks. All of these stocks, though, have waned a bit from the acceleration they got. Putting it back on a 3-year weekly, not quite sure that some of these equities, and this is where sometimes, folks, I love providing some aspect of fundamentals, some aspect of common sense, and some aspect of technicals when looking at stocks. Does it make sense that Southwest is trading at a higher price in April of 2021 than it was at prior to COVID? Now, yes, you can make the argument, rightfully so, that domestic travel, recreational travel, the pent-up demand is almost difficult to quantify in terms of how much people are just waiting to get out, get back to normal, be able to fly. I want to be able to visit my family in Boston. I got young kids. I'm not quite comfortable doing that, especially with things traveling the way they are with the Delta variant. Did it make sense for a domestic airline to be higher than it was at in February of 2017? Well, yes, you can make that argument, all right? But from a risk-reward perspective, not sure that makes sense when we're in the thick of things here with cases still spreading, right? Vaccination rates not where they need to be. And you had Southwest up at 64 bucks. Well, fast forward it about 4 months, folks, and we're going to open today maybe with a 49 handle on Southwest, giving back almost 20% on that equity, $51.11. You take a look at the Fibonacci run, though. Take a look at where we're at, right at about that 382, 48.56. Stay tuned, folks. When we come back, talking to our man Kevin Hinks from Thinkorswim Fast Market, TD Ameritrade Network. We'll be right back, folks.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500-plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE. And you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. We have the S&P is positive by 12 points. Talk about record territory, 44.42 right now in the S&Ps. We get the Dow up 123 points. All the markets catching a lift this morning on some moderate CPI data. To talk about the markets, let's go over to our man Kevin Hinks. Every trading day, folks, 11 a.m. Eastern time, live on Tiger TV. We're talking about fast market. Kevin Hinks, Alex Coffey and the team breaking down the action, talking about hypothetical trades, walking you through it. Kevin Hinks, maybe not as much inflation as the market was fearing this morning. Good morning.
Good morning, Tommy O'Brien. You know, I think I heard Jerome Powell scream, yes, even all the way from Washington to my house in Chicago. I could hear him screaming because this is a number that basically confirms what he's been saying all along, and that is the inflation that we've been seeing. There is some. He's not. You know, he's acknowledging that there is inflation, but it's not runaway inflation. It's not inflation that we have to be concerned about. And this 0.3 on ex-food and energy, I think, tells that, Tommy.
Yeah, I mean, 2% inflation on a yearly basis is A-OK. You can deal with basically 0.2% month over month every single month, and you get to 2.4%, you know, in ballpark, and of course, you know, all that stuff. But we're right in line almost at 0.3% on the core number. We had some deceleration even in the top line year over year number out there. Seems like Chairman Powell, like you said, he's going to be makes his job a little bit easier, at least, Kevin, in my opinion, if that's where the data is lying in terms of always talking about that transitory nature. What I find so interesting is, you know, you exclude food and energy, which definitely, as we know right now, is a volatile, I mean, crude especially. I shouldn't say crude especially, because food especially in the same right. But both of those data points coming in a little moderate. So the Fed, you know, they have their next meeting, of course, September. I think it's September 20th, maybe 22nd, something like that. But the market's loving this. We got all-time highs, Kevin, in the S&Ps. We got it in the Dow. What do you see happening in terms of where we go from here? In terms of we have a little bit of room for the Fed, right? We got job openings above 10 million. And I know you talk about your biggest data points. And I was watching the Fast Market program yesterday saying CPI, because of the environment that we're in right now, is one of, if not, what people are watching, rightfully so, in my opinion. And where do we go to next, Kevin, in this conversation with that type of data in front of us, and the Fed kind of a little bit ways out now to their next meeting?
Yes, you're right. The next Fed meeting is a ways out, but, Tommy, and this is a big but, August 26th through 28th, you've got the Kansas City Fed meeting. So that will be an important look. That conference that Kansas City Fed puts on that Jerome Powell is speaking at, so that'll be a big, they always make headlines out of there, so you've got to have that on your calendar as well. So, but, this is a number that, I thought indexes for shelter, new vehicles, recreation, medical care, and personal care all increased. But used cars and trucks, only up 0.2, Tommy. It was actually new vehicles that was up 1.7, and most of the inflation came from the energy sector, up 1.6%. So that is where a lot of it came from. But I think the next thing we have to look at is the end of this month when we get the Kansas City Fed conference. That I think will be important. Like I said, Jerome Powell speaking at that.
Perfect. That's why we have you on, man, for that great info. We still got some earnings. We talked about yesterday, maybe the main event for the week might be Disney. And folks, we have some Disney in my newsletter, full disclosure, out there tomorrow. But we got some companies reporting, of course, this week. We're kind of waiting on some of the big ones. But what are you guys going to be talking about on the program today, Kevin?
Well, today we're looking at the names that, I've been so busy with CPI, Tommy, I have no idea what we're looking at. But I can tell you right now, we're probably looking at maybe eBay. Sonos is on today. Bumble is on today. So,
nice.
You've got some good names here. They haven't passed me over the names yet. And like I said, we're so focused with CPI, we haven't even gotten – remember, we're in a little bit of a lull with earnings in terms of high-profile names. However, tomorrow we'll get Disney and Airbnb. Those will be plenty of high-profile. So what we've been doing this week, like yesterday we touched on Costco and those names. So I'm sure we'll be doing more of that as earnings this week, besides Disney, are really some second-tier stocks. Tommy,
you guys did. I was going to jump to it, Kevin. You did a great segment on Costco yesterday, folks. If you haven't looked at the chart in Costco anytime soon, watch out, man. I was aware, Kevin, of course, this equity hadn't pulled it up in a while. And, man, talk about a run from 307, folks, in March. I got the chart up here, Kevin, on the Thinkorswim platform, to 443. Basically a one-way trip, man. We paused at the 380 price point for a brief moment. But talk about a remarkable acceleration when so many, right, during the time when we were coming out of COVID, maybe thinking that they would wane. You trade from 380 down to 307, and that stock just takes off. It's amazing some of the winners and losers, Kevin, in this market, how we've differentiated. A company like Costco can trade up 45% from 300 to 443. Can you talk a little bit about, we have about 2 minutes here, just what you guys did yesterday for those that didn't catch it, because it was a great segment breaking it down.
Well, when we broke down Costco, number one, we broke down how unbelievably glowing coverage of this company. However, and this is a big however, this stock is extremely overbought right now in terms of a study on the Thinkorswim platform called Relative Strength Indicator. It's got this stock extremely overbought. So even though this is a high-quality company, I say this on the air all the time, Tommy, sometimes I want to be long it, sometimes I want to be short it. And so the actual strategy that we put on for Costco was to is a short strategy that would outperform on the downside in Costco. Now, next week, remember, you've got Walmart and Target coming out with earnings next week, and all these three stocks, especially Walmart yesterday, an enormous move for that stock on the upside. But all these stocks are extremely overbought. Costco, very possibly the most overbought of those names. So you've got to be careful here, even though it doesn't mean you don't love these companies, but these stocks have run a long way, Tommy.
It's a great point, man. I was looking at Walmart myself yesterday. I put it on a weekly. We're in the 8th consecutive weekly bar to the upside with Walmart going from 135 to 150. It's a strong company, man, to get that type of a move over a period of 8 weeks where you don't have a single red bar in there. We're coming up to the highs we had in December at Walmart, 148.68 right now. That high just 153. Well, Kevin, man, we look forward to the conversation. I can't wait to hear what you guys talk about just in the general wrap-up in the beginning of the program about the market, because this CPI data, man, it's amazing the volatility we have going on in the market. It's anyone's guess, but like you say, some moderate data today. We look forward to the program at 11 o'clock as always, Kevin.
Thanks for having me on, Tommy.
My pleasure, Kevin. Take care. Folks, tune in every trading day, 11 o'clock a.m. Eastern Time, live on Tiger TV, Fast Market from the TD Ameritrade Network. It's just an amazing way they break down the trades, folks. I was watching yesterday, and, they're traders. That's the bottom line over there, folks. Kevin Hinks, you're talking about a trader over there providing content and education that's just unparalleled. I mean, this chart on Costco, let alone, the volatility you had during COVID, where you got down to about 266. I mean, look at the run we had in Costco coming in 2019, from 180 up to 300. Now we're going from 300 to 443. But as you said, sometimes, folks, expectations a little too high. Stay tuned. We'll be right back for the market open.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. We got the S&P positive by 11 points right now, 44.41. You're talking about record territory. The Dow, record territory as well, up 114 points, about 0.3% in the green. You get the NASDAQ positive. All the markets catching a bid on that moderate CPI data out this morning at 8:30. Jumping over to Bitcoin. Bitcoin trading at 46,410. We got Coinbase out with their numbers. Coinbase jumping around. Higher today by 6.66%. Watch out. I kid. But 287, quite a price tag. Coinbase has had quite a run. I mean, you back this up. This is just a 5-day chart. You're talking about an acceleration of $60 from 228 to 285. But in that time, you've had Bitcoin jump about 50% from a price tag of 30,000. I guess on this chart it's 37, but you don't have to back up much further. You go 10 days. Nope. I guess we got to go 20. That gets us there. 29,000 is the price tag for Bitcoin. You're going back to about July 20th on that chart. We're sitting at 46,000 right now. Taking a look at Coinbase over that time, same scenario. You were at about 213 to correlate to those lows. We're trading at 288 right now in Coinbase. So their numbers, profit surge following volatile stretch of crypto trading. That's putting it lightly. 2.23 billion in revenue. Market was only looking for 1.78. That's quite a beat. Earnings per share, $3.45. Net profit for the quarter, 1.6 billion. Percentages for this company really don't apply when you're talking about almost a 5,000% increase from a year earlier. Coinbase's fate is tethered to the performance of digital assets like Bitcoin. That's putting it lightly. Now, what did happen there is that they saw a bunch of volume going to Ethereum, I believe, as well. Now, there's a couple stories out, of course, when Coinbase has their number. One of them, though, talking about that they dropped the promise of tokens cash backing that wasn't true. So for months, okay, this story out on Bloomberg on this morning, visitors to Coinbase would see the company offering a stable coin called USD coin, with a simple promise. For every dollar offered to investors, there's $1 in a bank account to back it. That promise was important for the stablecoin, which, unlike Bitcoin, has a set price and can be redeemed by users for a regular currency. It helped USD coin grow to be the world's second largest stablecoin with, what's that? Almost $30 billion. But when Circle First Financial, their partner in offering the coin, disclosed assets for the first time last month, it turns out the promise wasn't true. According, assets actually included commercial paper, corporate bonds, and other assets that could experience losses and are less liquid if customers ever tried to redeem the stable coin in mass. Isn't that the whole point? Be really careful with any of these companies, folks. If you think you're buying a stable coin that's tied to a US dollar and you're in crypto and you're with a crypto exchange and you're just relying on them, I would not do that, to put it lightly. And as it says, that's likely to catch the eyes of U.S. regulators and enforcers who have recently homed in on stablecoins. Yeah, I mean, it's one thing, it's one thing promoting a cryptocurrency and promoting that it's volatile, but saying that you think it's a good investment. It's another saying that we have $1 backing this coin and it's reliable and it's tied to the value of that dollar. I mean, that's just straight out fraud. So I imagine that that's what this correction has been made. You have a Coinbase spokesman pointing to a blog from earlier this month that said USD's coin reserves comply with regulatory requirements. On that day, they changed some of the language on their website. I mean, just be careful, folks. They're talking about what is USD coin, and there's the difference. Backed by US dollars, backed by fully reserved assets. A huge monumental difference that we all understand. If you're watching this program and you're up at 9:34 in the morning on Wednesday and you're watching Tiger TV and you're watching the morning market report and you're in the market and you're looking for financial information, you understand that saying, this is a public company, folks, okay, to the tune, just so we realize what we're talking about here. Coinbase is, as of today, a $59.7 billion company, and they are on their website, okay, talking about that they offer a USD coin, a stable coin backed by quote-unquote US dollars. $1 US. Each USD coin is backed by $1 US. Okay, and then guess what? Whoops, no, we'll just change that. They're backed by $1 or asset with equivalent fair value. Well, what if they're backed by, let's back them by some real estate. Let's back them by some lofty real estate. Maybe Coinbase is just going to buy a ton of speculative real estate that they'll use to back the US dollar coin, right? You get the point. Just be careful over here. It just continues to be story after story. You think that Coinbase might be immune from that. Not the case. Didn't It hasn't panned out to be a negativity for the stock yet. But when you see the potential, folks, for that, okay, if you had a wipeout of funds in the crypto sector and you had people in that coin, all right, you'd have this company going BK and you'd have those investors just straight out of luck. That's the way that the cookie crumbles. That money just doesn't come out of nowhere. All right, what else we got going on? Let's jump around to some of the stocks that we have with moves today. We have some earnings, as we talked about. So we got Canada Goose out with their numbers. They lost 45 cents. Market was thinking they were going to lose 53, though. They saw better than expected revenue. However, its loss widened compared to a year ago thanks to what? Rising expenses, folks. All right, you're going to hear it a lot. There's the chart of Canada Goose, and you're down 12% right now. You take a look at the daily. Basically going back to the consolidation they had, the lower area, you're talking about 39.03, but man, it might be filling the gap from an earnings about 6 months ago in February. The low part of that, you're talking about 35.48. Always a little dicey when you come into earnings and you're bumping up against an area, right? You come in at about $45. Yeah, we did get above that level briefly, but you can see that's kind of the area that we paused at in February for Canada Goose. Wendy's out with their numbers, popping a bit higher, but giving back some of those gains on the open. You have Wendy's up 2.9%. So their numbers, 27 cents a share, 9 cents above estimate. Same-store sales beat forecast as well as people return to in-person dining. Really going to be interesting to see if some of these trends hold, right? That data that they're giving you is for the 3 months prior. That was a good period of low cases, people feeling very comfortable to be out, maybe eating inside for the first time, maskless. Not sure that trend is going to continue, folks, for the next 3 months that we're in right now, for some of these equities that are relying on that so much. All right, you want to talk about a tumble. Let's jump to WW, Weight Watchers. Watch out for that stock, folks. Down 26%. Now, this thing is just crazy how it trades. Look at the last earnings, okay? You go from 25 to 37 within 2 days. You make it up to 41. Well, guess what, folks? 3 months later, you're below where we came into their prior earnings. You're below where we came into the earnings in February, and you are now pushing where we opened the year at about $22 after being up almost 100% just basically 2 months ago on Weight Watchers. And their problem there is earned 48 cents a share, 17 cents shy of estimates. The company did have a comprehensive plan to optimize performance during the second half of the year. Well, that's glorious that they've got that, but you had profit and revenue falling short of analysts' forecast. And man, it is a tough business, that business to be in terms of selling, meals, right? Plans. I mean, if you're on any type of social media, folks, there's a million influencers that are pushing their own weight plans, their own health, their own fitness. They don't even call themselves Weight Watchers anymore. They call themselves WW because you're not supposed to be watching your weight. You're just supposed to be healthy, right? Meanwhile, they're kind of still Weight Watchers. It's a tough business plan. I was surprised I remember last quarter when this thing accelerated higher. I said, man, that's not a stock that I thought was poised for a huge acceleration. I mean, this thing traded from 25 to almost 37 in 2 days, but not so much. And pulling up the Analyze tab, we're talking about a company valued at $1.6 billion right now. But man, giving up about 5% of that value. All right, folks, stay tuned. When we come back, we're going to be talking to our man Teddy Cakes at Forex-Trading-Block. We'll be talking on the Forex. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Well, welcome back, folks. We get the S&P is positive by 9 points right now. NASDAQ positive by 8. Dow positive by 172 points. Russell green as well. Let's jump over to our man, Teddy Kegstad, folks. Every trading day, you can reach Teddy at forex-trading-unlock.com. We talk to Teddy every Wednesday at 40 past the hour. We talk a little Forex. And Teddy Kegstad, what do you think about this inflationary data this morning, man?
I don't think it's as true as it really is out there.
Here we go. Let's do it.
So, honestly, well, you know why I don't believe it is because of the way the interest rate market is reacting to it. If the interest rate market really believed that this number was as positive, if you will, as it, I guess our Fed chairman and people who follow them believe, then it would be reacting differently. It's basically flat right now. So the dollar is obviously retreating off of this news. You know, it's having a little, but the thing is, all the currencies for the most part are trending into a new high or a new low, meaning the dollar has been strong versus them. So just because it's turning today off of this news, I wouldn't go too much to thinking that then you never want to try and pick a top or a bottom. This is a scenario where I'd be very cautious trying to fade what's going on right now, you know, so.
I'm just going to jump in and say I think you make some great points, even on the 10-year, man. I mean, this chart on the 10-year in terms of trading, it's a blip. The jump we've gotten when you look, we were trading at 135.14. You even take that spike out of there we had Wednesday. You were still at about 135. And you were pushing almost 133 today, and you're trading at 133.17 with a yield right now. We're talking about a yield of 1.35%, and we were coming in at 1.12, which is crazy 1 week ago. So to that degree, and the dollar index, you put it. I saw that as well, as in you get a pullback, but it's been higher prices for the dollar for at least the recent past.
Well, since we spoke last week, remember we were talking about how unemployment claims were going higher, but I'm like, don't be surprised if the unemployment number actually comes out lower, which it came out a lot lower than I thought it would. I thought maybe it would just be slightly. But I don't believe it though. I think it's nonsense. I think you really have to look at PPI tomorrow. You have to look at unemployment claims tomorrow. The oil numbers I think are significant to some degree today as well. I know that there's a little retreat in oil, but I don't think that that's going to stay that way. Especially with the infrastructure package that we have coming on, online. So, but I think that with the dollar, like if you look at the yen right now. it's been rallying up into, where is it now? It's trading at 110.47. It's a little bit lower on the day. It's having a knee-jerk reaction to the daily reaction to this number today. And that's why I have to say, like, because of that, it's an intraday move. It's not a trend move. Like tomorrow, we could see this market making higher move highs with the dollar again, you know? So that's where I'm looking at right now. I'm not necessarily a dollar bear because of these numbers, because I don't believe them, and I still see like the number tomorrow coming out negative. I don't see how it's going to be a positive thing, you know, as far as that's concerned.
It is crazy that I mean, that's basically an inverse of the 10-year chart in terms of the trade over there. Pretty remarkable the move that's had in the last week. 108.17 to almost 111 this morning before that pullback. Yeah.
And I still see the yen going to 112 half, 113 within the next couple months, you know. So I really think I think that the trend, see, that's the thing, is that if you look at the overall trend right now, like especially with the US dollar yen, it's a bull. So this is just a minor little sell-off. So don't get caught up in being bearish with certain currencies.
Yeah, I got the daily up there, and there's nothing screaming negativity on that chart going back a year for sure. Yeah. So where do we jump to next, man?
The next thing I would say is look at the Canadian dollar. So this one I actually have kind of an interesting little setup going on. So we know that it's been in an upside correction for the past couple of months, and now it's kind of bobbling. So it's kind of got some nice little pivot points from where it's trading at right now. Right now, I'm bearish if it gets a little sell-off again and hits support. If it takes out $1.2474, I think that will confirm that bearish strength exists for at least another couple sessions. There are some reasons to be more longer-term bearish to U.S. dollar Canada, so I like that trade. The one thing that would definitely take it out, now remember, because the dollar is pushing these right now highs and buffering, whether or not is the dollar going to come off this now, or is it flirting with resistance where it's going to be kind of choppy. If it's going to actually turn, you know, well then, you know, I could see if it gets above 125.89 in the Canada, you might have some room for a nice little leg higher where you can actually catch a nice, I would say maybe 1.5 to upwards of 2 basis points, you know, where you can get probably up to 126 area, you know. So that would be a trade to look out for, you know. As far as
I was just gonna say, and I just have the chart up. I mean, that's just kind of the area that it's been in, right? The last like 4 or 5 days or so. If it breaks below that would you say 124.74? Yeah, that's at the low from almost a week ago, August 5th, which was a pretty big downward bar. But man, it caught a bid pretty quickly on the 6th, Friday and Monday, to kind of bounce back from that.
But that's a market where I think you're going to start to see some good volatility, where you'll see some good price swings. It's not going to be this choppy, you know, we're not really going anywhere kind of thing. I think you're really going to have a swing trade situation going on for the next few weeks, for sure. You know, so I do have something I can guarantee for all of your listeners, though, for the next 5 days in the marketplace.
My ears just got a little bit worried. I heard the guaranteed word. Let's hear it. Let's go.
Well, this is all legitimate, too. You can go to Amazon.com and get my book, High Probable Japanese Candlestick Patterns, for free as a Kindle version if you want to go there. So that is a guarantee. Man.
Awesome. I appreciate you doing the show last week. I heard you talking about the book, The Candlesticks. Candlesticks, one of the things I love to look at as well, folks. I know you got some good callers talking about the candlesticks out there, so that was great.
That's why I'm doing it for you this week, because it's our 13-year anniversary for our company, too. So I figured because your listener was talking about it last week, I might as well put that promotion out for you guys this week.
Well, congrats, man. We appreciate it. That's awesome.
Thanks.
So what about oil? I know we jump around. My ears are burning for a little bit of oil action. I know you're saying you're still a bull. You know, it just before it cracked me up a little bit today. Some of the headlines. Now, you know, we all know that media companies, no matter what industry they're in, love headlines. And I love the headline out here today. I'm trying to find it real quick. I didn't have it up. Just talking about that Biden wanted to pressure OPEC to open the spigots, and I was like, what does that have to do with anything? You know, as in the pressure. That plays in. So, you know, oil pulling back a little bit. Maybe it has something to do with that, but I kind of had a little chuckle myself. Yeah, and there it is. White House calls on OPEC to boost oil production. Well, yeah, as we know, that's not quite the influence we used to have.
It's not going to happen. Right. Yeah. I heard the same thing, too, and I laughed as well. I mean, him saying anything to OPEC is a joke to begin with. So
he can say it, but we know that their influence, I mean, there's no reason why they would really have to listen to that degree. Yeah.
Well, I think the biggest thing you have to watch out for oil is, like, I mean, if these variants really are as severe as they're saying, well, then we're going to have a deja vu occurrence of what we went through a year ago. And if that's the case, that means supply is, as far as tankers of oil being able to move globally, that could cause a big problem where it's not a matter of how much is being pumped anywhere. It's just a matter of it isn't going anywhere,
Yeah,
So,
really
and that's another
considered
problem
that,
where I
right?
think we could have that happening, especially, as we head into the fall and the winter time. Absolutely.
Sure.
If we go through this again and it hits us then, I don't know how we could not have oil back up at $100 a barrel.
The other thing I'm going to sprinkle on top of that, just as living in Florida, we got a tropical storm or a depression somewhere in there. It's kind of the first one that has some spaghetti models, right? I think it's Fred. But yeah, we're coming into hurricane season, of course, as well in the Gulf, which we know provides a little bit of volatility potentially as well.
Absolutely.
Well, Teddy, man, we appreciate the update. And folks, head on over to Amazon. Check out Teddy's book.
Absolutely.
We appreciate it, man. Congrats on the 13
Thanks,
years.
Tommy.
We look forward to talking to you next week.
Absolutely. You guys take care.
Thanks, Teddy. Stay tuned, folks. We'll be coming right back to finish up the program.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get the markets pretty much sitting right where we opened up. We got the S&Ps up by 11 right now, 44.41. We get the NASDAQ giving back some of those gains. NASDAQ up about 24. The Dow catching a bit. Check out the Dow, 35,359. Jumping around to some of the other stories. So you had Boeing out here. I believe it was. Where are we? There we are. Boeing MAX takes to China's skies in test to end flight ban. So we have some Boeing in my newsletter, folks, disclosure. And Boeing, there's a little pop-up, 1.25%. The market liking the idea that they are pushing to the skies in China. So this it's test flight above Shanghai on Wednesday for Chinese regulators, potentially a step forward, lifting the plane's more than 2-year grounding in the country. You take a look at Boeing. It's kind of part of the reason why we got into this equity in my newsletter. Quite a little uptrend channel we're talking about on a weekly basis here. We make that low at $89 back at the depths of COVID. You bounced off that on October from a price of $148, and we came and touched that level basically perfectly just about last month at that price level, and we've taken off. We'll see if that's the beginning of the rise for Boeing. They still got a long way to go, though, to get out of where they are. One thing I want to talk about, folks, a great article if you get a chance to check it out. Way too long to break down all of it, from ProPublica out here talking about the taxes and the pass-through deductions that are possible. I tell you, there are no returns possible, folks, all right, like donations for political donations and lobbying. The returns possible if you are in the upper stratosphere of wealth are just staggering. And this just kind of goes through in terms of the breaks that were passed through for the tax cut last year. It specifically talks about the pass-through, okay, companies. Now, these would be smaller companies sometimes, but folks, really, you're talking about some companies that are mammoth in terms of how they classify themselves. You're not talking about corporations. You're talking about pass-through companies, and it's just staggering when you look at the amount of money that they had. The top of the list there is Bloomberg. Now, when he ran for president, all right, he was going to do away with this deduction. So, yeah, he benefits the most. Not his fault. He was trying to do away with it. He's still going to take it, but you get some of the others, and some of the others were some of the biggest donors out there. But, man, they're making potentially billions off donations of 10 to 20 million. Check it out. ProPublica out today talking about that. Ultra wealthy gaining, that shaping, the big, beautiful in the last image. You got to end it because, man, it's staggering. Top 10% of households on that. Top 10% of companies, 36 billion. Everybody else, 6 billion. Thanks for starting your day with me, folks. Stay tuned. Your man Basil Chapman is coming up next. Live programming all day. Have a great Wednesday, everybody.